Mhm.
Hi everyone, I'm Sinem Bal, one of the co-directors of Center for the Study of Social and Global Justice. Today, again, I'm very happy that we're hosting one of our good friend, Andy Higginbottom. He's a retired academic and Marxist scholar that's specializing in political economy. And is today that he's going to make his presentation as a continuation of his Marx readings, Capital reading course at presentation. And this Marx Capital Volume 3, Lecture 5, Profit, Equalization, and Wages. Okay, mostly he will talk about profit crisis, finance, land, and imperialism, which also we can see and we'll discuss in the contemporary capitalism. So over to you, Andy. Thank you very much for having this lecture.
Thank you. Thank you very much for your introduction and presentation. So, yeah, this lecture is going to focus on we're still in part two of volume three, and we'll be looking at chapters 10 and 11 and 12. I am going to give some further commentary on the previous two chapters because it's kind of like the pivot of at least my argument, and I want to return to a couple of points. I mean, these are quite challenging. This material is quite challenging. A lot of debates for the last 120 odd years over it. For me personally, I feel coming out of the woods. You may feel I'm leading you further into the thickets. We'll have to see, right? Um, my commentary on the previous two chapters is based on two sort of simple points, really, which is I want to bring out more overtly the underpinning of Marx's argument in these chapters from volume two. And I want to stress that there's a further underpinning that's possible from volume one. Um, so what we have here, so I'll do that first, and then I'll go through these three chapters. Then I want a third point is I'm going to do a full survey of all literature because it's quite huge, to be honest, right? But the ones that are relevant to my take on the transformation problem. And if there's time, and I'll got a few extras, which is sort of like advanced points about what we've been looking at. Okay. Sorry, I just got a lot of noise on my screen, which I'm trying to get rid of. Okay. I want to draw attention to the notebooks which Marx made in his second round of work on this topic, which is in 1867, 1868. Which didn't quite get through to Engels' edit, I have to say, right? I do think this is the high point of how far Marx got with this problem. And he's very clear, as he has been actually in part one of volume three, that the rate of profit is determined by three principal variables. One is the rate of turnover, the other is the organic composition of capital, and the third is the rate of surplus value. In this notebook that I'm going to highlight, he concentrates on the capital turnover, which he mentioned in the published chapter 9, but doesn't really go into, right? Um, Now, Marx's method in this notebook is quite interesting because what he does is he starts with an assumed normal case of what the total social capital will look like. But he represents that as an individual capital. So if it's like the typical average capital, right? And then he proceeds to compare that through differences with other capitals, other cases, if you like, to assess the effect of the changes in one variable or another. So these variables, if you like, are comparing different sector characteristics with a case or a sector which is the average norm for the whole. And the reason I'm saying that is because that's a stepping stone, I think, towards how capitalism actually works. Um, so what I'm saying here is that Marx brings in quite a lot of what he's explored in volume two in his explanations here, in his working exercises here, I should say, right? And also, I do want to emphasize them because there was quite a big mistake in my view in the literature, which stresses a continuity between part three of volume two, which is this whole big scheme as a reproduction stuff. I think that's a mistake, basically. And if we got time, we can discuss that. Um, So when he discusses turnover, there's two different types of turnover, which it's important to have in mind, to be aware of, right? One is the turnover of the circulating capital, which is the raw materials and the wages. And that element turns over much more quickly than the entire capital, because the entire capital has got the further aspect of the fixed capital, the machinery, the buildings, and they turn over a lot more slowly. So when Marx talks about turnover capital, one has to be sort of quite conscious of which of these two he's talking about. And he uses two characters to represent them. So the cost price is K, is a fairly consistent notation he uses. And the capital which is advanced to set up production, he uses C. And this comes directly from volume two. And he's basically, in broad terms, he looks at three different cases in these exercises. He's very sort of detailed, meticulous, if you like. So he looks at a case where C is greater than K. And what that would mean is that the capital turns over in more than a year. K is actually the capital, the cost price of a year of production. Perhaps I should have written that out more fully, right? So if there's more capital advanced then the capital which is used up in a year, it's going to take more than a year for the money advanced to come back to the capitalist producer. And so he looks at another case where C is less than K, which is very unusual and quite unlikely, and where C equals K, which is equally unlikely but possible. So what that would mean is that the capital advanced would turn over in exactly 1 year, which means that the cost price of the commodities produced in that year would be exactly the same as the capital advance. And in that situation, I did talk about turnover in the last lecture. In that situation, the markup on the cost price would be exactly the same as the rate of profit. And I'll talk about that a little bit more. Okay. So Marx concentrates on this particular case, and the reason he wants to do this is he wants to look at um, specifically effect of turnover on the rate of profit. So has a starting case where the circulating capital turns over 4.6 times a year, and then he slows it down. He says, okay, well, let's just suppose it just turns over 4 times a year. And I'm not going to go through his detailed work, but what his detailed work shows is that the rate of profit in that circumstance would fall, which is very sort of commonsensical, because if the capital advanced is needed to increase because the turnover is slower, then that means even for the same surplus value, you're going to have a lower rate of profit because you need more capital advanced in the first place. So this is what he's looking at here. I mean, he looks at how circulating and the entire capital turnover combines with organic composition to affect the rate of profit. Engels missed this degree of sophistication, which is there in the notebooks, in his interpretation of turnover. Engels was on the right track. He just didn't quite finish the job, really, in my view, right? Um, but there is not, and I've looked through this now, you cannot really find much in Marx's notebooks which brings the transformation problem back to a starting point of labor time. You don't see worked examples which include socially necessary labor time and how that figures in the transformation problem. So, so this is in the form of a question. How is the average rate of profit actually formed? Is it pi or is it pi? Well, that's my little joke. Um, because we're talking about the sharing out of the cake or the cutting of the pie into its irrelevant segments, its sections, according to the size of the capital invested, they will get a proportion of the size of the profits. That's the basic underlying rule, which means that all capitals are being, if you like, being treated equally. They have an equal claim to the total profitability. That's the idea of the equalization. But it still doesn't tell you how this actually comes about. And how does it come about? Is it there simply is this great big pool of profits which gets or surplus value which gets cut up in different ways to make profits? It's not quite like that. I mean, that rule holds, but it's not enacted through a direct aggregation and then redivision, right? It's as if that happened, but there is a mediation. And this mediation is the other pie, this thing of markup, right? So what we looked at last time is that the markup, the pie is different in each sector according to its capital structure. In other words, if there's a lot of fixed capital and raw materials being processed in a sector, in other words, if the organic composition of capital in a sector is high, that means that the markup will have to be high as well, because the simple value will be quite low, right? So each individual capital works on a margin between its revenue and cost. I mean, you don't need to be a Marxist to know that. Every business in the world works on that basis. Every capitalist works on that basis, right? Um, Now, the markup over cost, which is another way of saying the margin, the cost of the commodity sold is required to make a given profit. That's what we're talking about. So Marx writes about this in his notebooks quite frequently, that the capitalists actually price up their cost to get a selling price, which is basically a price which will deliver to them a given rate of profit, right? So what we have here is a singularity which connects the general with the particular. The generality is actually expressed through the way each individual capital works, or each sector of capitals work, right? So it's sort of like it's immanent within each capital. So capitals get there. It's not an or, it's a both, basically. Now the degree of markup can be higher or lower than that which delivers the average rate of profit. I mean, the markup doesn't have to equal the amount which gives the actual average rate of profit. I mean, that's a sort of the assumed sort of underlying rule, but in practice, some sectors can make more profit than others. So, this is not a pure laboratory experiment here. Okay, so this is going to happen. So the profit form is the premise of further adjustments for movements of capital between sectors. Now, I say this because what we'll see is there's an ambiguity or slightly contrasting statements in what we're going to look at in chapters 10, 11, 12 about how this actually happens. Okay. Now, this is something I showed last time. I'll go through it quickly. No, not so quickly, because I just want to register it right. What's in red is something I've drawn out, but all of these figures are directly taken from Marx's main illustration, right? So we have these five capital sectors. They have different organic compositions, which means that there's a different, relatively fewer or more workers set in motion to create new value. And therefore, there's more surplus or less surplus value produced in each sector. But this surplus value is then averaged to get an average rate of profit. And in this case, that would be 22 for every 100. So the profit is going to be 22 on 100, or 22%. Now, what I want to show here is just a different way of making that calculation to reach the same result. So I'm just trying to illustrate using Marx's example how this markup works. Okay, so we've got the capital advance of 100. We have a surplus value in the first row of 20. Now, the used up constant capital would be the depreciation of the fixed capital plus the raw materials. Okay, that's got no immediate and direct connection with the capital advance. They're different amounts. Okay, so the cost of production over a year includes the constant capital used up and the variable capital used up. So this 70 is evidently the 20 variable capital plus the 50 constant capital used up. So the total cost price of producing these commodities, which are output during the year, is this K, which is the constant plus the variable, the constant used up plus the variable. Okay. Okay. So that's the cost price. Now, if the commodities were being sold at their simple exchange values, which would be their cost price plus the surplus value, that would be 70 plus 20. Okay. But they're not. And so now, how do we get to the rate of profit? Well, if you take each of these rows, you can see we've got the capital advanced and we've got the capital used up, and they're in a ratio. And that ratio, the C over K in this turnover period column, the C over K, that is how long it takes for the capital to turn over. So in the first row, the capital will turn over in 1.43 years. And you get, in each case, these are all quite similar, actually. The capital turnover in the first four sectors is fairly similar. It's between 1 and 2 years. Then the last case, you've got the capital takes over 6 years to turn over because it's a very heavy weighting towards the fixed capital. And the fixed capital will take 10 years or more to turn over. Okay. But then what we have, and again, I haven't added any information here. I'm just extracting something from the figures that Marx has given us, right? So what you can do is you multiply this turnover period by the desired rate of profit, or if you like, the given rate of profit, or the target rate of profit, or the assumed rate of profit of 22%. So it doesn't tell us how we got there now, but it's telling us how a capital in each sector could actually end up getting there, if you see what I mean. It doesn't tell us how we got to 22%, in a fundamental sense, but in an operational sense, it will indicate how the capitalists actually do it, right? So what they do is they will multiply their turnover period by 22%. And in this case, the first row, that's 31.46%, and that's the markup. So they will add 31.6% to their cost price, which is 70, and that's what generates this 22. And in each case, it's sort of like, if you like, it's a tautology because the mathematical ratios should make that happen, right? But the point is that there's two different ways of measuring profit, the rate of profit. It's the same profit, but it is measured fundamentally, more fundamentally, if you like, in terms of capital accumulation against the capital advanced. I mean, finance capital is interested in the return on the capital advanced, but more operationally, the way that's achieved by operational management, if you like, of a capitalist firm is they have to generate it through looking at the excess over cost price. And if you look at any capitalist accounts, you'll see that's the case, right? So the price of production, which is equal to the cost plus profit, is equal to the cost plus either rate of profit times capital advanced, calculated one way, or markup times cost the other way. Okay. So in this example from Marx again, what Marx says at the beginning of this chapter is he's going to keep turnover uniform. In actual fact, what he does is he keeps the turnover of circulating capital uniform. And as we've seen, the turnover of the entire capital does actually vary. And that's how we end up with different markups on cost. So this is one sort of big point I'm trying to register, how it happens in practice. The other second big point is to bring in volume one, basically, more explicitly. So again, it's Marx's leading example, and we've got it's not a column that Marx explicitly highlights, but it's very straightforward, really. We've got new value. The new value is in the first row would be the 40 variable capital and the 40 surplus value. So the workers in that sector produce a new value, which in exchange value terms, if it's represented proportionately, would be £80 or £80 million or whatever. Okay. However, we've got a typo there. If you think of the new value, the way it's actually expressed, given the transformation takes place, it won't be V plus S, it will be variable capital plus profit. And so the profit is 22 in each of these rows, but you'll see that that value added is different to the new value in each of these rows. So what you've got here is instead of a new value which is proportionate to labor time, what we have is value added, which is the variable capital plus profits. It's wages plus profits, basically. So they're not the same, and only by coincidence would they be the same. So the used up C here of, say, we take I don't know, we take the first row. Let's stick with the first row. The used up C is 51. Okay. Uh, the variable capital is 40. So we're either going to add to this 40, so I should be here. This 40, we either add 40 surplus value or we add 42, which is the amount of the new value necessary to make this get a rate of profit of 22%. So what I'm saying is, according to the organic composition of capital, the new value is represented differently. It's not represented according to its proportionality with labor. It's represented according to what will deliver this equalized rate of profit. Okay. So it's represented differently in the money that's produced in each of these cases. Now, what I do, and this is in addition to Marx, right, is I just say, well, let's just exemplify this a bit more deeply with bringing in labour time. Let us suppose that wages are £10 an hour and that the rate of surplus value is 100%, which means that new value is being produced at the rate of £4 an hour. Sorry, £20 an hour. Sorry, okay. So that means in 4 hours, there will be 80 new value produced. But in this first line, which I've rearranged the line, so this is the lowest organic composition of capital. But the actual value added only appears to be 62 because it's the 40 of the variable capital plus the 22 of the profit. So that is 62. So instead of 4 hours labour being represented by £80, they are in this sector being represented by £15.5, right? And so you see, according to the increase in the organic composition, which means that the variable capital is relatively reducing all the time, then any given amount of labor time is going to be represented by more value added per hour. In the case of the most uh, highest organic composition sector, which is the lowest number of workers, the profit per worker there is higher. It's at the level of, can I work it out quickly? But if you add the variable capital to the profit, you're going to end up with this 54. And furthermore, and finally, you don't need actually to include the idea of labor time to get this result. If you just look at the profit being generated in each of these sectors, which in every case is 22, but it's been generated off a variable capital, which is quite different in each case. So this ratio, the profit over variable capital, is again increases quite dramatically the higher the organic composition of capital is. And so that it appears as though the workers, I mean, it's not just an appearance, there is more profit per worker in the high organic composition sectors, but there's the same surplus value produced per worker. And so the hinge of all this is that labor time is not being represented in a proportionate manner. It's being differentially represented according to the organic composition of capital in the sector. So this is really sort of my main result, my main argument. I've got a supplementary point, which is just about the whole methodology and reflecting back on how Marx designed capital. I mean, I do think there's a very major design arc, which really starts at chapter 4 of volume 1, and we're coming toward the end of, which is the sort of the laws of motion of industrial capital. And that within that, there are two lines, and he's already established in volume 1 the wage form. He's already explained how the wage form disguises that workers produce surplus labor because it appears as though they're being paid for the labor, but they're just being paid for the labor power. So what's lost in that is the surplus labor. It appears as though workers don't produce surplus labor. Uh, and now we have the other side of that story. It's taken a long time for Marx to get here. He's got a very long arc, right? He's gone through about 1,000 or more pages, I guess, right? But now he comes to how the surplus labor does actually appear. And it appears in this disguised form, in the profit form. It's completely disguised because it appears as though it's the product of capital rather than the product of labor. So we've got this complementarity, if you like, between wages and profits as the two forms of income of the two classes, right? And just to sort of make this a little bit, when you go through it from this perspective, you can see all these sort of steps have been designed in. And the notion of transformation is not just in what we're looking at here. He's talking about the transformation of money into capital. He's talking about the transformation of surplus value into capital. There's lots of sort of big hints in retrospect about coming towards a transformation problem. And what the transformation is, it's a transformation of the commodity form. So it's no longer just a simple exchange value, but it's a capitalist commodity. So it doesn't just bear value, they bear profit, basically. So this whole idea of Marx's design being a spiral, this is sort of validates it, if you like, fills it out a bit. Okay, so that's the review. Now just coming on to the new material. Chapter 10, it's got quite a long title, and actually you can think of the different sections of it by different sections of the title, right? Um, Once again, I do think that this is misleading, I have to say. So, put certain points, and this is one of them, I do take a critical distance from the text, right? I think that it's just on what we've just been discussing, then the rate of profit is not just the rate of the profit is not just the rate of profit times cost, right? Which is what this sentence says. It's either the rate of profit times capital advanced, or it's the markup times cost. Okay, except in a very unusual and unlikely case, right? Um, then there's another issue, which is are is the movement of capital what establishes the conversion of simple values to the rate of to prices of production, or is the movement of capital something which, if you like, implements the rule of prices of production? And there's definitely sentences in the text which suggest the former, but I argue the latter is the only one that really makes sense. It's in terms of a system of self-reproduction, right? So, prices of production is the commodity form in the capitalist mode of production. So, if there's any point at which Marx says, well, commodities are at their values, this is like in my point of view, this is like a heuristic, or it's a sort of abstract fiction, if you like, right? It can't be true in the capitalist mode of production, right? The exchange of commodities at their simple values, exchange values that is, or approximately at these values, corresponds to a much lower stage of development than the exchange at prices of production, right? For which a definite degree of capitalist development is needed. So there's a historical transition, if you like, but it's not within the mature reproducing capitalist mode of production itself. And one of the reasons for that, which Marx gives in these quotes, is that it's a system of mass production rather than just sort of small scale artisanal production. And the overriding point here is that these commodities are the product of capital exploiting labor and not just simply the products of labor, right? Okay, so scale is a quite important. We're talking about industrial sectors here. So this is one quote from Marx, which sort of is goes on one side of this discussion, if you like. Okay. Um, Now, the next thing he looks at, and takes up quite a lot of the pages of this chapter, is he looks at the difference between market prices and market values. And so basically, even with simple values, you're going to have the fluctuations of supply and demand. So the price will go up if there's more supply. If there's more demand, the price will go up. And if there's more supply, the price will tend to go down. Right. So what he's looking at is this sort of movement of supply and demand, right? And there are kind of like two explanations, which he gives both in a way. One is okay, so they oscillate around a socially necessary labor time, if we're talking about simple exchange values. But he also introduces this idea of a modal socially necessary labor time, effectively, which is that when the demand is high, it's the less efficient producers whose value is the modal one, because demand is high, and even the less efficient producers are able to sell their individual values, right? So there is a single social value, if you like. It's what sets the price, is the representation of the single social value, but that moves in a range. It moves between the individual values of the highly efficient producers or the least efficient producers, right? So there's a sort of movement. There's a range of the movement, if you like. And Marx deals with this. It seems to me, anyway, before he gets to price of reduction, he explains this quite a lot, basically saying, okay, well, we'll just think of it in terms of simple values, simple exchange values, right? And then he shifts it into the same argument, more or less applies if the movements are around prices of production. In other words, if you've got a high organic composition of capital sector, then the prices are going to be higher than the simple values, but the supply and demand will then just move around that higher price of production. And ditto with if it's a low organic composition, it will be lower than the simple. Okay. But he's using this to illustrate the next level of concretization, if you like. So he's got two scenarios here, which is, of course, you have to bring in at some point supply and demand, right? So he's brought it in relation to simple values and worked it through there. And then he brings it in again a second time in a second scenario in relation to prices of production. So this is the market prices and market values. And then he keeps on going a bit with competition. Um, so we've got this low point and high point around. When you're talking about prices of production, it's clearer that the low point is about cost, right? If the price goes below cost, then capital just stop producing. But they might produce if it's cost plus a little bit, not maybe the full average rate of profit, but at least some profit. Then that might be enough to keep them in production. Okay. That's capitals competing against each other in one sector. But of course, there's this other idea, which is, well, how do capitals in different sectors compete with each other? And here the point is, okay, so they're all seeking to increase their profit. So in a way, the rate of profit must be the sort of the vector of competition. But can we say any more than that? And what he's saying is, yeah, we can, because in those sectors where prices are high, then there's going to be high rates of profit. In a sense, this is pretty obvious, but he's sort of thinking it through, giving us all the steps in the argument here, right? Okay, so you can think of this in terms of higher prices, higher profits. And this is also a matter of how supply and demand may affect and work through into higher or lower rates of profit. Okay. Now, he does say here that the movement of capital between sectors is what transforms values into prices of production. And I think that is inconsistent with what he told us a few pages earlier. And I don't buy it, to be honest. So we can discuss it, right? I think that the movement of capital between sectors in a developed capitalist system will be around the form, at least, of prices of production. Okay. And in a sense, he fairly shortly suggests something different than what he says about England. There's only one place in the world at the time where you've got sufficiently advanced capitalist development where within a given nation, this equalization is actually taking place. And that was England at the time. And the assumption is that there's a mobility of capital and labor power between sectors. So that's some more on competition. And then he comes to surplus profit. And so what we got with the transformation problem is that the capitals in the different sectors are actually making the same rate of profit, even though prices of production are higher than simple values in the high organic composition sectors. That's just to make the average rate of profit. Is not a particularly privileged position in and of itself, right? Now, what he's doing here is he's returning to this idea, which is already written about, which is the idea of a class totality. That it's a bit more than just simple class consciousness, if you like, of solidarity. Uh, there's an economic basis for capitalists working as a whole, because actually the way profits are worked out it is as parts of a whole, right? So it's a direct economic characteristic of capitalist exploitation. They're all part of a total exploitation of all working class, right? But then he does move into, okay, but that's true, but that's not the whole story, right? Because we've got individual capitalists, they've got their capitalist ego, they're entrepreneurs, so on. They're keen to make their own profit, right? How do they do that? And this is the idea of capital seeking particular advantages, okay? So they might want to cut their workers' wages, make them work longer, make them work with better machines, or whatever. All these ways for individual capital to increase their profitability. And it is interesting that he has got reducing wages below the average as one of the ways he knows that capitalists can actually increase their profitability. So he's got this notion of some capitals engineering for themselves or encountering, but more likely engineering favorable conditions under which they're able to generate from their workforce more than the average rate of profit. In other words, a surplus profit, whether it's the innovating capital or whether that capital is able to get away with being more oppressive to their workforce and so on. Okay. So then the surplus profit that which they get corresponds to an individual price of production, which is lower than the general price of production for that sector. Okay. So this is important step in his argument because these more favorable conditions are kind of like a breeding ground for monopoly, right? It's not yet a pure monopoly that he talks about, but in a certain sense, they are, if you like, a partial monopoly. If you've got an innovation and you want to make sure that the other capitalists don't share your innovation as capitalists, you'll take a patent, right, which is to monopolize the intellectual property, right? And if you've got workers that are cheaper for some reason than the others, you might not want to let the other capitalists know or whatever. Okay, right. So a surplus profit can also arise if certain spheres of production are in a position to opt out of the transformation of their commodity values. This is like almost like a voluntary thing he's suggesting here of their commodity into price of production and consequent reduction of their profits to the average profit. Now, what he's hinting at here, which he will develop much more fully later on, is this idea of how to explain rent emerging from capitalist agriculture. If commodities sell at their prices of production, simple values that now prices of production, how do we explain rent in terms of the law of value? And what he's basically saying is, well, if agriculture's organic composition is lower than the social average, right, which means that there's more surplus value being generated in that sector in relation to the capital invested there, right? Then what you can do is convert some of that surplus value into rent and not make it available to the averaging of the general rate of profit. That's what he's getting at there. It's an interesting idea, and there are other ways that that works. So that's chapter 10. Chapter 11 is based around much less discursive. It's a very much a worked example. He's led by the worked example. I mean, he brings out the general points, but it's quite important to follow the worked example to sort of like for the penny to drop. What's he doing here, right? So what's he looking at is the effect of an increase in wages and conversely a decrease in terms of whether the sector is average composition, organic composition, less than average or greater than average. So we'll start off with the average one. I'll follow Marx in doing that, right? So he's saying, let's say that the average rate of profit is 20%. And you may recall the method I mentioned before. He's taking this not to be the totality, but to be a sector which is typical representative of the totality. Okay. So in this sector, we've got 80C, 20V, and 20S. The rate of surplus value is 100%, which means the profit is going to be the same as the surplus value of 20, and the rate of profit will be 20% because it's 20 profit over 100 capital advanced. Okay. But then he said, okay, so we're going to increase the wages. So we're going to go, wages are going to mean that variable capital is now 25. The new value produced is going to be the same. That's going to be 40. So the surplus value has to go down from 20 to 15. The profit is 15. The rate of profit is 15 over now an increased capital advance because we've got 80 plus 25 now. And that works out at 14 and 2/7%, which I'm sure you mentally it all worked out anyway. Okay. So the new value is the V plus S is still 40. And the price of production is still also the same as it was before. It's 120. But the elements that make it up have shifted. Instead of 100 cost and 20 profit, we now have 105 cost and 15 profit. But because this is the typical representative of the social average, what it turns out is that raising or even falling the wages does not change either the new value or the price of production, but it does change the components of the price of production, right? Now, this is all based on a certain turnover value, right? Which is that it's the case I told you before, C equals K, that the entire capital turns over in 1 year, right? So it's a different example than the one he gives us in chapter 9. So he's stretching his limbs in a different exercise here. Okay. So once again, I'm reminding you that the condition here is a very particular one, right? And this is the note. I've already made that point, right, about the method. So there's two further cases. If you look at lower than the social average composition, he's proposing now that the price of production we start with is 50C and 50V. So there's a lot more workers employed now for 100 capital invested. But this is the original average rate of profit of 20. So the price of production in this lower organic composition would still be 120. Now, this gets a little bit complicated. I should try and expand this a little bit. He's reduced the rate of profit overall to 14 and 2/7%, right? So he applies this rate of profit to the new capital advance in this sector. New capital advance in this sector is 112.5. And he applies the rate of profit of 14 point, whatever it is, 0.4 something to that. And he gets a profit of 16. He tends to have these, rather than decimal places, he tends to have these fractions still. Okay. But what it means is, anyway, the price of production has risen by 7%. So wages have risen, price of production has risen. Quite a proportion of this is a wage cost. Okay. Then, and this is where it gets a little bit counterintuitive, right? Higher than average composition of capital. So he's got a composition of capital of 92 plus 8, and that adds up to 120. And you apply again this average rate of profit to the capital advanced, and you come up with this profit. Okay. The price has fallen, or the price of production has fallen slightly. Why? Because although the wage costs, they're a lower proportion, wage costs have shown a small increase, but the profit has fallen. And so there's a bigger effect in the high organic composition sector of the effect of falling profit rate. Okay, so this is this is also for me an interesting case methodologically. If you added up these three capitals, they don't add up to a totality. They don't balance out. You'd have to add another sort of nominal sector, a fourth sector, to make it all average out. So the question there is really, would you need this fourth sector to sort of examine these processes? And for me, that's an interesting open question. Right? So, summarizing what Marx is doing in this chapter 11 is according to how much labor intensity there is in a sector, the effect of rises and falls of wages will be different, right? In any case, they still need to have profit rate equalization. A general fall in wages leads to a general rise in surplus value, in the rate of surplus value, and in profit rate. A fall in production prices and for commodity products of capitals in the lower composition, and a rise in production prices. Now, this is important. It's a potential link with the theory of imperialism. I'm just trying to repeat this right. He doesn't explain this as fully as the case of the rise in wages, but he's obviously aware that you can also have wage falls as well as wage rises, right? And the fall in wages tends to accelerate the dispersal, if you like, of production prices from simple, right? They're going to fall even more in capitals of lower average composition, and they'll rise even more in production prices where the profit element is relatively much greater, right? So this is only possible if wages have either been above their normal price or they're now pushed below it. And again, I'm taking that as a potential link with the theory of imperialism, right? Mm. Now, this is also a point which you may want to sort of reflect on, right? The last point here, he does all this assuming that the rate of profit is a given, right? It's a given fact. He's saying that capitalists work on the basis that they've got some working idea of what the rate of profit is that they're working towards or working against, if you like, as a measure of their success as a business, right? Mm. Now, this one I don't find especially interesting, so I'm just going to go through it fairly quickly, to be honest with you. A change in the price of production may change either because the general rate of profit changes, or, and this is important, this second point here, or because the value, underlying value, if you like, has been reduced because labor productivity is increased, right? So, in chapter 11, he was discussing higher and lower wages. Here, the cheapening of commodities is due to greater labor productivity, which is sort of like a major thread running through the whole of capital, right? So the overall system effect of for individual capitalists increasing labor productivity is a main connection between what he's saying here and what he goes on to argue in part three about the movement. So we've been talking all this so far. It's not a lot of dynamic in what I've been explaining so far. We're talking about the form of the rate of profit, the variables that go into it. But what he's also interested in is what are the laws of motion, if you like? What's the dynamic? What's the contradiction in the movement of the general rate of profit? And we're going to come on to that before long. Yeah, again, I'm going to slightly skip number two. He's just really summarizing chapter 11. The capitalist grounds for compensation, section three, again, is interesting, right? Because he's saying, well, capitalists, if they don't have the average rate of profit in their sector, then it's kind of accepted within the system. This sounds a bit subjective, I have to say, but he puts it slightly this way: it's accepted that they can compensate, they can add to their price. Say if they've got for various reasons they're not making the general rate of profit, then they can compensate by adding to their prices, right? Yeah, that's what he says here. Then he's got lastly on this, I think he's got a section which tells the reader what competition does and does not show. And finally, he tells us that in competition, everything appears upside down, right? Because the essence is concealed. It does appear, he's made this point already in chapter 9, and he's coming back to it, which is that the essence of the creation of new value is basically hidden, right? He says through competition. I actually think that it's not just competition, it's the profit form itself which hides, which is a point he makes in earlier on in the volume. So what we have now is the movement of capital. I mentioned this earlier in terms of trying to compensate for lower uh, rates of profit. There will be ways in which prices are raised in order to compensate for that. Okay. Uh, and this is just kind of like emphasizing a point. I mean, what the profit form means that it's not just about equalization. Prices of production are not just about equalization. They're about the form in which commodities appear in circulation. And it appears to be that the profit element is actually created not from surplus labor, but from the agency of capital themselves, right? And this is the spontaneous capitalist perspective. And in this quote, he's returning the end of the chapter. He's returning to themes that he had already initiated earlier on, and it's a theme that Marini picks up in when his theory of superexploitation. Okay, so I know I'm really struggling with time. Um,
Yes, a little bit, Andy.
how long? 10
A
minutes.
little
Yeah,
bit here. We have a time problem
yeah.
for Q&A.
Yeah. No, I understand. I will keep it to 10 minutes. This is a very bit unkind caricature of the discussion of literature. The one thing that I want to emphasize is how Marx positions himself against the literature of his time, right? So in his volume one, chapter one, which some of us are just reading now, he compares the approach of Bailey with Ricardo. Ricardo has got a labor theory of value, but it's very physicalist. He knows that labor time is a substance of value, but he doesn't explain money. And in contrast, Bailey says that price is everything and that labor substance is just a myth, right? Now, Marx is able to explain both the substance and the form of value as exchange value. And in that, he's able to critique both one-sidedness of Ricardo and Bailey. Now, when it comes to the capitalist system, Ricardo still sticks with labor time being the determinant of prices, but he sees the equalization of profit rates as just an exception. He can't explain it, basically. And now Marx does explain it. Uh, Maybe didn't quite finish the explanation, but he goes a long way to explaining it. But Marx's explanation, in turn, is critiqued by Böhm-Bawerk in particular, who says, well, if volume three is true, volume one can't be true. If the regulating price is not proportional to labour time, then all of your theory is bunkum, isn't it? It just falls, right? So what you've got is the need to re-explain and defend Marx in the face of this critique, because the point is that labour is still the source of value. It's just not it's not represented in direct proportion. At least that's my argument, right? So Hilferdink seeks to defend Marx, but I think it's quite a weak defense. So this is the state of literature immediately after Marx, but then most Marxian interpretations of the transformation problem actually go in a slightly different direction, right? And the issue is that they keep this assumption of uniform proportionality between labor time and the regulating price of production. And therefore, they miss a lot of what Marx achieved. And in a sense, they're actually closer to Borkiewicz's criticism of Marx than I think to Marx himself, right? Because if you don't allow proportionality to shift, if you don't allow the relationship between the substance of value and its representation in money to be different in each sector, then you've got to find somewhere else to explain the variation, right? So then there's a search for what is the point of variation. And they find, well, there's various arguments, but then none of them very convincing. So I think that most Marxians are actually, in a way, a bit closer to Ricardo and Borkowitz in particular in their interpretations. So there needs to be a stronger defense of Marx. This is the hegemonic interpretation, which I'm going to leave undigested. The main point really is that the framing idea is one of inputs and outputs. They actually concentrate on the constant capital. And I argue completely the opposite. Constant capital isn't an issue, actually. It's how does living labour get represented? The new value, how does that get represented, right? So it's a misframing of the problem. The other big characteristic of most of the interpretations within Marxian claiming, sort of seeking to explain Marx, is that they miss how this sits into the overall architecture of capital. They generally sort of just jump straight in part two of volume three. And what I'm trying to emphasize is there's the continuity in the design and how it all sort of fits together overall. This is Straffer's solution, which has had a very big influence on a generation of Marxists, which is to me, sub-Marx, let's say. It's almost sub-Ricardo in a way as well. Right. These are the influences on me, my take on it. Rubin, Grossman, David Yaffe have all made, I think, helpful contributions in this field. The particular influences, stronger ones, more proximate, if you like, on me, are these authors, Salama and Tran, Chris Arthur, Ilyenkov, and Vazjulin, right? So I think 5 minutes. I just want to show you these extras, if I may, very quickly. There's a very important discussion about uh, the profit measure, what it's against. I've sort of rehearsed that a little bit. And there's three different forms of capital that have relevance in this discussion: the rate of profit, the capital applied, the capital used up, and the capital advanced. Okay. And this C, the S over C, the C of the S over C is not just capital advanced, it's the commodity capital advanced is what we've come to realize, right? So it's the C of the commodities that have been bought and waiting to go into production. And just moving on. Similarly, the organic composition of capital, what capital form, organic composition of capital? It's of the productive capital. It's of the capital applied in production. And finally, a very interesting area for discussion, which of course there will be for further discussion, is if all commodities, their form has changed from a simple or simplified form to a more complex and real form in the capitalist system, which is from simple values to prices of production. What about that commodity labor power? Right? Is there something that we need to reflect back into the concept of the commodity labor power from this discussion? And I think that you cannot say that labor power has a price of production because there's no profit made specifically from the production of labor power. Um, and what's, of course, this raises is the whole question of what labor does go in to production labor power, which is the hidden character of gender oppression in unpaid domestic labor and the invisibility of the work mostly carried out by women in domestic and caring labor. So, in other words, it's a capitalist social relation, but it's not. Commodity labor power is the product not of capital, but of capitalist social relations, which are deeply gendered. And then finally, the other question is so Marx didn't bring in different rates of surplus value, and that's something which is for us as followers of Marx to follow up on. And it is extremely relevant when we begin to look at questions of the declining rate of profit and how capital moves to overcome the declining rate of profit, which we'll look at next time. Okay, thank you.
Okay, thank you very much, Andy. That was really nice to hear every detail about this chapter. Yes, thank you very much. Okay, anyone, so we can now go to Q&A. Any questions that you want to raise and ask to Andy or discuss some details instead of asking a question? Add the detail or discuss a detail.
There is a problem with me going on so much.
No,
Just
no, no. No question? No, it was very clear, that's why maybe. Oh, Tony,
Tony.
yes.
Yeah, yeah.
Tony, because I understand from the way he listens that he will have a question because he was like always like this all during the presentation.
Well, I did notice actually my name at the bottom of one of
Yeah, yeah, yeah.
but it's about must be 10 years ago, and I've been doing other things since. I'm afraid it certainly isn't fresh in my mind. I was just wondering though. I seem to remember when I did that work 10 years ago, the distinction that Marx makes between the concept of individual value and that of social value is actually quite important. So I was wondering if you could say a little bit more about that or your take on that, how it fits into the account that you've offered.
Yeah, yeah. I mean, I agree with you. It's important. And to be honest, I just spotted that in my notes. So I reread your article just today. So that's a bit unfair. But I think there are two different things, okay? The distinction between individual value and social value, as you know, first crops up in chapter 12 of volume one, right? Where he's talking about the innovating capital, the
Mm,
competition of capitals within a sector. And
yeah.
what you've got there is the idea that the innovating capital is able to make per unit commodities more cheaply, yeah, with
Mm,
less labor time.
mm,
And of course, what it also says, and what a lot of commentators miss, and I don't think you missed, I think you're right about this, is but that also means because the volume of commodities they're producing is greater, that their actual value creating capacity of those workers has been enhanced. Yeah,
mm,
temporarily, if you like, until the other ones catch up, right? And I agree with that. I think that that is Marx's argument. And we were discussing it in one of the reading groups, right? So
mhm,
that's one thing. And that's the difference between individual value and social value. Yeah. So
mm,
the
mm,
innovating capitalist has got a lower individual value per unit, but a
mm,
higher degree of value production per worker hour. So both things are
Mhm.
happening at the same time, right? Now, what I think is there's another distinction which overlaps, but is not the same as that, right? And
Mhm.
that's between the substance of value and its form of representation as exchange value. Okay.
Mhm.
So I think that the key to the transformation problem is the latter, because in the transformation problem, he's just assuming prices of production which are the same as the equivalent of the social value in each sector. Yeah,
Mhm.
they're the average for that sector, basically. So
Yeah,
you're
yeah.
going to have a sector price of production. Okay.
Mhm.
And so you've got to be able to explain sector prices of production, if you like, in that context. But I think in terms of how the average socially necessary labour time for that sector gets represented by,
Mhm.
okay,
Mhm.
and what we're saying is it's due to the amount of capital in that sector, which determines how much profit.
Yeah,
Okay.
yeah.
So, but then we come back to individual and social, but now in terms of prices of production, right?
Mhm.
And the only place that to my knowledge, that Marx does this is in the case of agriculture. So if you sort of jump forward and look at his theory of rent, he actually
Mhm.
says in agriculture, the individual price of production of the capitals on the more fertile land is lower than the social price of production, which will
Mhm.
be the average or the marginal in agriculture's case, right? So you can rework chapter 12 of volume one
Mhm.
now with prices of production.
Uh-huh.
So you'd have individual and social prices of production. In other words, the innovating capital has got a lower price of production, individual for that capital, than the
Mhm.
price of production for that sector.
Okay. Thank you very much.
So they fit together,
Yeah, yeah.
but
Okay.
we go step by step in our understanding.
Okay.
Thank you for both of you. Any questions? Yeah. Yeah.
No more comments?
Summer stars, Andy. Everyone is very flexible.
Well,
They're
well,
just
I
so
could probably comment on something else. Well,
Yeah,
actually,
yeah.
very early on, you said you were showing us these tables, and you
Mm,
made well, what I think is a very interesting remark. You said, well, all of this is true by definition. It's a tautology.
mm,
And I thought that was very interesting because, of course, some people, if you're thinking about questions of method, which is one of the
mm,
things that you're
mm,
interested in,
mm.
but there are some people anyway. I guess probably this would be true of Karl Popper, wouldn't it? There's if something's true by definition in the tautology, it couldn't possibly be said to be scientific because, of course, it's not empirically falsifiable or
Yeah, yeah.
refutable.
Yeah,
So
yeah,
that would
yeah.
be a good reason for dismissing, like Bernberg, dismissing Marx out of hand as being a charlatan and so on and so forth. So I just wonder if you had any thoughts about that. I mean, obviously, I don't agree with that at all. I think it's quite an interesting issue, though. I think if you're interested in the philosophy of science and what Marx certainly meant when he claimed to be scientific, that's just a very interesting philosophical issue, I think.
Yeah, you're right. Okay. I think I'm on thin ice there, to be honest. I mean, I said tautology, it sounds slightly pejorative, and you're right, it's generally seen as a pejorative statement. And of course, it
Mm,
doesn't have to be pejorative.
no.
I mean, one of the things about this is another way of saying it is that there's two sort of mathematical circles, right? If
Mm,
the if you take the rate of if you take the profit as such, right, then there are two ways of calculating it. You can divide it by one denominator, or you can
mm,
divide it by the other denominator. So you've got one in the other denominator. And then, of course, the rate of profit in those two ways is also the same as the ratio of those two denominators, right?
mm,
That's a mathematical tautology, if you
mm,
like, right? But it
mm.
doesn't really get you very far. It's more to do with the way um, capitalism actually works, is what I'm trying to get
Yeah, I
at.
see.
And it is this slice of the cake type thing, which,
Sure.
how do they know what's their slice of the cake, basically? How do they come to that? That's really what I'm trying to get at. Yeah.
I think I've defended in the past the idea that Marx is in terms of the literature on the philosophy of science. He's very close to scientific realists like Roy Bhaskar, who defend the idea that even in the natural sciences, tautologies have an important part to play. There's a real definitions of naturalistic entities. So Marx is actually quite close to people like Roy Bhaskar, I think, on that particular issue. I seem to remember him saying at some point, is this a tautology? Yes, it is. It is indeed. It is a
Of course it
tautology.
is.
But let us examine this tautology more closely.
Exactly. No, you're right. You're right. Marx is because it is this concept of the whole, isn't it? He's saying these are
Yeah.
different aspects of the whole.
So,
It's yeah, it's a dialectic of the whole and
Uh,
its parts.
okay, we have two other questions
all
from
right. Okay.
Walter and Fabio then. Walter, over to you.
Yes, I have to admit to being, bewildered by a number of points in this lecture. I was looking over the outline the outline that Andy circulated a couple of days ago, and found that there were several points where I really had to stop and try to figure out what this meant. And I was hoping that the lecture would expand on them. But in fact, the lecture did the opposite of expanding on them. It just kind of skipped over some of these things. And I think the lecture could have taken 2 or 3 hours rather than just one in order to really explain. So I'm all I can say at this point, I'm still there are quite a few points that I'm bewildered about without saying exactly what they are.
Yeah. Okay. Yeah, that's fair. I agree with you. That's probably fair.
Yeah, we have a time limitation, unfortunately, about this Zoom meetings. Fabio.
Hello. Hi, Andy. Thank you very much.
Hi,
Fascinating.
Fabio.
Right.
Um, well, as the presentation was quick, in the end, I was wondering if you can explain better or more in more details the difference of your take on the transformation problem in contrast with the current debate on the Marxist literature. And also, I'm curious to know if you have researched the same debate in Latin America or other regions of the world
Hmm.
to see what Marxists outside Europe and Anglo-Saxon were debating regarding the transformation problem. Thank you,
Yeah,
Andy.
yeah. I want to be very clear that in general, I think the debate about Marxism and in Marxism in Latin America is in advance of the debate in Europe. I do not think it's in advance on this particular topic, I have to say. I think it's no more clear in Latin America than it is here. Um, but let me just take the first one. What was the first one again? Sorry.
Your take on the
Oh,
transformation
the state
problem
of debate.
in
Yeah, yeah, sorry.
contrast. Yeah, yeah.
Okay. The debate in Europe, well, not in, no, sorry, not Europe, in the Anglosphere, really, is focused on inputs and outputs. You can find a quote in Marx when he says, well, there is a question of the transformation of the inputs, but I'm not going to deal with it now, right? And it's completely focused on not only an input-output model, but it's also focused on the idea that the inputs, Marx failed to transform the inputs. He assumed that they're at simple values and they need to be transformed into prices of production. Okay. And then the debate is about when do those prices of production come about? Is it historical or is it a point of entry and so on, right? I honestly think this is angels on a pin discussion, right? And what I tried to show, I mean, everything was quick, right? Is that actually cost price doesn't change, right? In terms of constant capital cost price element does not change. And therefore you can take it out of the discussion. It's actually not at all about constant capital cost price. Marx assumes that they are at prices of production and they have to be at prices of production because if they're sold at prices of production containing cost plus profit, they have to be bought at prices of production containing cost plus profit. So I think it's an absolutely dead end discussion, right? And it misses the main point. It's a complete, that's why I've got the I know it's a bit rude, but the parakeets or whatever they are, parrots, right, pecking away, right? Um, the real discussion is not about inputs and outputs. The framing of the discussion is about how new value in its substance as living labor is represented in money terms. Okay. Now, in part one of volume one, Marx argues that it's proportionate. A certain amount of socially necessary labor time is represented by a certain amount of money. And he follows this through. So I've mentioned this before, but it's very well known in volume one. The workers get paid 3 pence an hour. They produce value at 6 pence an hour. Therefore, you can work out what the new value they add, right? That rule he carries from simple commodities. He carries it forward into his discussion of capitalist commodities, right? So he's assuming for a long time the simple commodity form, even though he's actually writing about capitalist commodities. And I'm saying that at the beginning of volume three, he repositions the discussion about the commodity, right? The commodity of part one, volume one does not have the same contradictions as the capitalist commodity with which he begins volume three, because the commodity at the beginning of volume one is just the product of labor. And if there's any sort of dialectical contradiction, it's between its use value and its exchange value, right? But actually, that's not a systemic contradiction of the capitalist mode of production in the same way as there is the contradiction between capital and labor. And it's the contradiction between capital and labor with which Marx repositioned the capitalist commodity. He says the capitalist commodity is both the product of capital and the product of labor. And that's a contradiction which is played out in the form of it, right? So the essence of a capitalist commodity is not just a substance, right? It's not just socially necessary labor time, right? The essence of the capitalist commodity is a class contradiction. It's the division of socially necessary labor time between necessary labor and surplus labor. So the contradiction, the driving contradiction, is a class contradiction, right? And I really give a lot of emphasis on the first two chapters of volume three. If you read that, he's bringing that out. He's saying, the cost to the labor is this, the cost to capital is that, and they're different, and they're perceived in different ways, right? And that's what he's working through. So I'm saying that the prices of production are not just the result of competition, right? They're actually the necessary result of the capitalist mode of production, right? So it's the commodity form based on capitalist social relations of social antagonism. And this commodity form disguises what class is the author of new value, what class creates new value. Because in the price of production form, cost plus profit, it would appear that capital creates the new value, right? Okay, which is a complete inversion of the realities. And that's so I think that this qualitative understanding of the inversion, which Beverly Best has some grasp of, I have to say. She doesn't spell it out how it actually works, but she does know that there's an inversion. She interprets Marx correctly on that point, right? And I stress that, right? So all the quantitative stuff, and I know I've done loads of like quantitative stuff, but the fundamental point is that instead of being relatively transparent as new value, right? The labor time isn't represented as new value. It's represented as what we call value added, which is wages plus profits. It's not wages plus surplus value. It's wages plus profits. And that's the trick, if you like. So they complete.
Okay.
Sorry, lastly, sorry, on the second question.
No, please finish it. Finish your
Yeah,
sentence.
very quickly. To be honest with you, I've gone back to Ronaldo Carcanolo. I've gone back to Marini. I've gone back to that generation of the 70s. And although I think Marini is fantastic in terms of interpreting this, in terms of international commodity exchange, I don't think he got to this point, to be honest.
Yep. Thank you, Andy and Fabio. Any other questions? We have some time.
There is a debate in Latin America on this right now. And I mean, I want to sort of participate in it basically. But the followers of Carcanolo, excuse my pronunciation, you correct my pronunciation, right? They tend to see the point of variation in this sort of market fluctuations, right? That's where they put the variation, and I think it's a displaced, yeah, it's the wrong focus.
Mhm. I think there is no other questions. Yeah. Okay. Andy, thank you very much. You got very tired. Oh,
Oh,
add
Ed,
George's one. Yeah.
go ahead.
Okay. Add George. Add, please. Go
Yeah,
ahead.
sorry. Hi. Very interesting, Andy, as ever. I'm a bit like Walter, really. It's just to say that there are so many issues that arise in this. It's a bit difficult to know where to start. And I think this is where the reading groups will be useful because we'll be taking up these issues in the reading groups. I just wanted to make one observation in relation to. I think you went over it quite quickly. It's not your fault, right? It's time issues. So it's not a criticism, but I think you went over quite quickly on Marx's discussion in chapter 10 on market price and market value. And I think that's a very important discussion, is where Marx actually discusses the social mechanisms whereby the social mechanisms through which competition moves. And I think that's the kind of link between what you get in chapter 12 of volume 1 at one end of the scale and the stuff on rent in volume 3 on the other end of the scale. That's kind of the link between the two. Just the observation I would make is that all that entire discussion on market price and market value is couched in terms of simple commodity production. In that Marx abstracts from capital. He abstracts from profit equalization by abstracting from profit, by assuming that the workers own their own means of production, which with an assumed equalization of producers' incomes rather than the equalization of capitalist profits. And then later on, he kind of says, well, everything I've said about market value applies to prices of production, but market value is the analog of prices of production if you abstract from profit and profit equalization. So that's really the answer to the question that logically poses itself in chapter 1 of volume 1, is that if you say that commodities exchange at their values, if that's your assumption, then the question is how does that come about, right? Because no one decides to do this. What are the social mechanisms whereby that comes about? And that's his discussion of market price and market value. But I think that's something we have to pursue in the reading groups. And I hope Andy, I'm in the Sunday one, I hope Andy can come to, again, this is not a criticism, I understand, I've said in the group, I understand that Andy has a life outside of us, but it is very useful when he does come.
Not much.
He has a lot, well, yeah. But something, I'm sure. And just another quick observation. When you said that labour power doesn't have a price of production, because labour power doesn't. The value of labour power is the commodities that make up the wage basket do though, don't they? So if you're
They do.
if you're making a conceptual, and I agree with Andy that it's not an actual transformation in chapter 9, but it's a conceptual. I'll stop now. It's a conceptual transformation. Well, if you're making that transformation, the values of those commodities will be different from their prices of production, unless you imagine some extraordinarily unlikely sets of circumstances. So we'll carry on these discussions in the reading books.
Yeah. I mean, that's really helpful. I might have misunderstood chapter 10. I'm not quite sure. But I actually felt it's just one of those areas where it's just read like it's like very much a first draft, right? He spends all the attention on simple value, but we actually do need to know how does it work with prices of production and competition. But I don't think it invalidates it. I just feel, when he says and you're right, he says it's an analog of price of production and it's basically the same. and that's what I take it to be, but I haven't pressed it further. On labour power, what I'm trying to say is, of course, the commodities that are bought in, like the cans of tuna I always think of, right, which go into the feeding of the worker, but the actual labour process of producing the commodity labour power, they're just inputs, right? There is still work which takes place, and that doesn't produce a profit itself, right? It's not produced by capital. It's work in the household basically, or around the household, if you like, which produces the commodity labor power. So and that's what really distinguishes it, and had to distinguish it, right? Because if capital did produce labor power, a regulating price which included profit element, then it wouldn't make sense for the system overall, would it? Because it would just be too costly for all the other capitalists. I think.
Okay. Okay. I'm looking whether any other questions. I see no. Okay, then we can finalize. And thank you very much for every detail, also answering the questions. Thank you very much for this night and for this presentation and spending time with us. Thank you, everyone, also for listening and spending time with us and joining us.